I've been seeing a lot of chatter about XRP Supply Shock for months now, and I think most of it's just clickbait fodder. People trying to get views. XRP exchange reserves are currently reportedly sitting at 8-year lows, depending on who you ask. Sounds like a supply shock brewing, right? Maybe. But as far as I can tell, there is no XRP supply shock, at least not yet. So the quick answer to the question is XRP supply shock is probably not going to happen anytime soon, with soon meaning anytime in 2026. A supply shock in crypto happens when a big chunk of tokens gets pulled off the exchanges, making them scarce. If demand holds or increases, prices can rapidly rise for sure. But here's the catch. Lower exchange balances don't always mean moonshots. It's just one factor in the equation, and there are many factors. Although the narrative of diminishing 1.5 billion XRP on exchanges is good for getting video clicks, these kinds of disingenuous assertions hurt the collective credibility of the reporting community. And as a member of the reporting community, I don't want to hurt my own credibility. According to an X post by Vet, who is a reported XRPL Dunnel validator, expanded datasets across 30 platforms still show roughly 14 to 15 billion XRP sitting on exchanges. Way more than the tiny figures you've seen hinted at and floated around in YouTube land. Also, the XRP radar numbers at xrptachinsights.com corroborate Vet's assertion, as it shows over 14 billion XRP available on exchanges. According to Vet, markets are unpredictable and elastic. Sometimes $10 to $15 million of buying pressure sends prices skyrocketing upward, and other times $50 to $100 million fail to even put the brakes on an accelerating drop. Order books move, preset well triggers are tripped, and liquidity shifts, yada, yada, yada. You've heard these same talking points many times on a lot of other channels, and people seem to talk about them all the time, almost like they're getting the same information from the same source, an intelligence that's maybe artificial in some way. Okay. Now, if a big player got involved and went bonkers and decided they wanted to scoop up 10 or 15 billion tokens of the current total exchange supply, then yeah, that would be a legitimate supply shock, and the price would absolutely go bananas.
And more broadly, what have crypto fund flows revealed about investor appetite for assets beyond Bitcoin? Are you seeing growing conviction around Ether specifically, or is that still a much earlier story?
Those are clearly the two assets that we see the most interest in. I think when you look at this space, Bitcoin is the clear number one. Obviously, it's roughly 60% of the entire market share of the whole space. Ether is a clear number two. It's low teens % market share. The next is, we're talking 3-4% market share. And so that's where overwhelmingly the interest we see is, but we do see pockets of interest in some of the other assets as well. And we continue to evaluate those as conditions evolved and as maturity, liquidity, scale, and use cases develop. But we take a very discerning approach in terms of what we would put in an iShares ETF.
That was BlackRock's head of digital assets, Robert Mitchnick, waxing poetic about the next round of digital assets in their queue. Logic says an XRP ETF should be a major contender and on the short list for implementation by BlackRock. But who knows when and if that's going to happen? We just got to stay tuned. Getting back to the XRP supply shock catalysts, compounding institutional adoption, increased structural tightening, and DeFi locks that quietly reduce tradable supply, all while demand builds, can create the right shock conditions. So a credible XRP supply shock in 2026 is possible, but highly, and man, I mean highly unlikely. The highest credibly reported token inventory that's on exchanges is listed at over 14 billion, and not the 1.5 billion tokens being bandied about. So I'm not going to stick with that. I'm going to stick with the 14 billion number. As far as institutional adoption goes, we know the SEC is full steam ahead. Here is SEC Commissioner Hester Pierce giving the SEC's new digital assets canned response.
And one area now that is really atop on our list to try to get right with respect to regulation is the whole digital asset area, crypto assets. So maybe, and you are obviously the head of our crypto task force, now Project Crypto, which is wonderful. You've done an excellent job. You have, I think, a lot to be proud of to help change the direction of the SEC vis-a-vis that particular area of financial services. So I was wondering maybe what you could do is explain a little bit about, what is crypto and why is it so important for continued strength of American capital markets?
Well, I will tell you that it's a lot easier to do a good job on crypto in this environment where you're very supportive of us trying to get to a regulatory framework that's understandable, that's fit for purpose, and then we can I think better address the problems that come up in crypto, but also really open up opportunities for people to innovate in this area. And that was really how I was looking at this issue from the get-go.
Welcome to the party, pal!
We need to have financial regulation that is open to innovators because innovation is what makes the financial markets resilient. It's what ensures that they serve people's actual needs.
Perfect!
And then there's the broader regulatory impact, the Clarity Act, also known as the "Hey, we're done, we're not done. Hey, we're done, we're still not done" fumble fest that's currently moving through the U.S. Senate, and it could deliver beneficial guardrails. And I say could deliver. I know for sure whatever they come up with is going to be beneficial to us, but it's the U.S. Senate, so there's going to be some mess with it. There's going to be some stuff that you got to watch out for and kind of go through with a fine-tooth comb. But the net positive is going to be exactly that, a net positive for us. Those clear rules will invite bigger players and steadier demand. A legitimate, full-blown squeeze needs sustained demand, meaningful exchange drawdowns across many platforms, and regulatory clarity. If all of these things don't happen in concert, we can expect range-bound action with sporadic bursts of volatility. If all of these things do happen in concert, prices probably will increase, and they're going to increase rapidly because scarcity plus demand equals jet fuel. If that happens, I already own the asset, and I ain't mad at it. To wrap up, the trifecta to monitor that could trigger a supply shock for XRP is concurrently diminishing or zeroed out exchange reserves, massive DeFi lockup, and implementation of regulatory clarity. Good luck on your crypto journey, and thanks for watching.